A point of interest helps you to able to reduce the level of drawdown you're going to have on a particular setup. There are basically about three types of point of interest. We have the point of interest caused by a demand zone, we have the point of interest caused by a supply zone, and we have the point of interest caused by a flip zone. I'm going to show you how to identify these point of interest and be able to use them to make good trades while trading. But before we go into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to see content like this, I want you to smash the subscribe button, like this video, and drop a comment. I'll be right back. If you listen to me in this video, you're going to understand what a point of interest is and how you can be able to use point of interest to understand what you're going to be doing on the chart. Now, a point of interest is simply a refined supply or demand zone. What this means is this: once you refine a supply or demand zone, it automatically becomes a point of interest. Now, there are basically about three types of point of interest. We have the point of interest caused by a supply zone, we have the point of interest caused by a demand zone, and we have a point of interest caused by a flip zone. I'm going to explain this thing one by one, and then I'm going to show it to you on the chart. Now, when it comes to the point of interest caused by a supply zone, let's for instance we identify a supply zone, which is simply probably a rally, a base, and a drop. Automatically here is simply the supply zone. Now, if we refine this zone probably to a particular specific candlestick, it becomes a point of interest. What this means is this: we want price to come back to our point of interest and then we look for a sell. This is simply the point of interest caused by a supply zone. On the other hand, if it's a demand zone, probably it's going to look like this. A rally, a base, and a rally. Automatically here is simply the demand zone. Now, for it to become a point of interest, we want to simply refine it and represent it with a specific candlestick, and then it becomes a point of interest. And what this means is that if price come back to this zone, you'll be looking for a buy because this is your point of interest. This is referred to as a point of interest caused by a demand zone. Now, let's talk about the one which is referred to as a point of interest caused by a flip zone. Let's assume we identified a rally, a base, and a rally, and then we'll refine this place to become our point of interest. Let's assume we refine this place to become our point of interest, and probably we're expecting price to come back to this place, and then we'll look for a buy. But instead, price came back to this place and failed. Now, when price fails this place and price come back to this zone again, it is referred to as a flip zone, which means this place simply refers to as a point of interest caused by a flip zone, which means if it was a demand, it's going to be a supply. I'm going to show you how to do these things on the chart by simply analyzing GPUSD and show you a live practical example, and if possible, we are going to take the trade together. Now, for us to analyze this trade, we have to follow our simple rules, which is to go from the higher time frame down to the lower time frame. The first we want to do on the higher time frame is to understand where price is heading to and be able to use where price is heading to make decisions on the lower time frame. Now, for us to know where price is going to, we want to understand where support and where the resistance is, because it tells us where price is heading to. And we have to zoom in properly and see what we are doing clearly. Now, if I to draw support and resistance, we can simply see that this point is basically our support, right? This is support, and for every support there's a resistance, and probably you can see here is simply our resistance. First touch, second touch, third, and even fourth touches on this particular level. So this is a very valid resistance. If you can interpret what price is doing on the daily time frame, you can simply see that price is currently at a resistance level. That means chances are that price is likely going to start going to the upside, or price is likely going to start going down to touch the support level because price has gotten to a resistance level. Now, for us to understand if price is going to continue going to the upside, or price is going to go and test the support level. We want to understand what price is doing at every key level. And here, for us to identify the key level, we can simply see that here is the first key level, and here is the second key level. That means we're able to identify two key levels on this particular time frame. Now, having identified the key level, we want to understand how price is behaving from each key level to understand if price is going to continue to the upside or price is simply going to start going to the downside to test the support key level. And for us to understand that, we want to simply understand market structure that price has created from this key level to the resistance key level on the 4 hours time frame. Now, on the 4 hours time frame, we want to simply understand market structure. And if you have to understand the market structure, you can clearly see that price is simply giving us a series of swing high, swing low, swing high, swing low, and probably this is likely going to be a swing high, which means price has to give us a swing low for the swing high to continue. Let me show this in various ways, we'll see what we're doing. Which means price here is simply a swing high, and price has to give us a swing low for us to continue a swing high. But there's no confirmation here that this place is simply a swing high until price gives us what we're looking for. Now, having identified the structure, what we want to understand is simply understand where the supply and demand zone is, right? And we want to understand where the supply and demand zone is from this particular swing to the current point where price is, right? By simply identifying the supply and demand zone. You can clearly see this place is the first point of demand, a rally, a base, and a rally. So here is simply the first point of demand. Again, you can see that here gives us another rally, a base, and a rally. So this point is simply second point of demand. And when this occurs, you simply see that here is simply a rally, a base, and a rally. And here is simply the third point of demand. Now remember I told you about the point of interest. We're going to be refining these demand zones to understand what price is basically doing to know what we're going to do next on the chart. Now if I define this zone, we want to simply represent this zone with a specific candlestick on the 1 hour time frame. And if we are to refine the recent one, we can clearly use this point here as our refined point of interest by simply representing these places with simply all of these dodgy sticks that appeared at this point here. So basically this is simply our point of interest, and probably we are expecting price to give us a change of character at this point here, and then we'll move to continue the trend because price is basically in an uptrend. Now let's refine this other one too. If I refine this one, I can simply use all of these points as our point of interest. And if you have to define here, I simply use here as our point of interest, which has been triggered already. Now our interest is simply on this particular point of interest and on this particular point of interest. Remember, we want to know if price is going to continue going to the upside or price is going to simply start going to test the support key level, which is simply at this point here. Based off of what you saw on the daily time frame, that price is currently at a resistance level and price is likely going to break the resistance level or price is likely going to start and test the support level. We're only trying to figure out if price is going to continue to the upside or price is going to continue to downside. Now everything look okay for us to buy at this point unless you see a change of character. Now for us to take an entry on this point, now we want to simply see how price is behaving at this point on the 15 minutes time frame. Is there liquidity? If there's liquidity, where is the liquidity and is this place going to hold? Now looking at the thing, there's no liquidity at this point for this point to hold. There's no liquidity at this place for this particular key level or this particular demand zone to hold. So an entry on this pair now is to simply go back to the 1 hour time frame and expect two things to happen. One, we want to see price fail this point of interest. That means we want to simply see price fail this point of interest here and then retest back to this place to become a flip zone, and then we'll look for a sell opportunity at this point here. That means an entry on this particular pair to simply wait for price to either give us a change of character to the upside to this point or price to fail this point of interest. And when price fails point of interest, we want to see price come back into this zone again to act as a flip zone. Remember, I told you that a point of interest can be caused by a demand zone, caused by a supply zone, or caused by a flip zone. Now, if this occurs, it simply means that this point of interest that acted as a demand zone here has changed to become a supply zone. So this refers as a flip zone, and they're looking for a sell opportunity at this point here. And when we see that opportunity, target this place as our take profit. That means an entry on GPSD is to simply wait for price to fill this demand zone, come back to this zone, and then we look for a short opportunity, targeting this point of interest here, and probably our stop loss above this high here. So this is basically going to be an entry for me on GPSD. So I'm going to patiently wait for price to do what the price wants to do around this area, and then come back for a sell to this other point of interest. I'm going to be updating this result on my setups. That's all for this video. You'll see me on the next one. Peace.